Hey, what's going on, everybody? This is Bennie Childs with the Teach Me to Fish Effects community, and I am here today to teach you the quarter swing method that I have compiled that makes trading the Forex market relatively easy and down to the fundamentals. So one thing that I like about the strategy, again, it keeps everything easy, and it's down to the bare fundamentals of trading. And what that may be, you ask? Yeah, well, that is support and resistance. That's right, support and resistance. So I have a chart here right now. I believe it is the USD JPY is what it is, the UJ. All right, and for this strategy, all right, this is a support and resistance strategy, and we're going to slow the market down. Okay, it's nothing. I love it because we are slowing the market down. All right, and so what I mean by that is we're trading off of nothing less than the 1 hour chart. I'm going to demonstrate this for you on the daily chart. We're going to put everything together and back test so you can take a look at everything. But this is really good for nothing less than the 1 hour chart. So I recommend this for the 1 hour chart, the 4 hour chart, the daily chart, the weekly chart, or the monthly chart. Now, listen, this will work. Trust me, this will work on any chart that you want to trade on, whether that is the minute chart, the 5-minute chart, 15-minute chart, or the 30-minute chart. It will work on the lower level charts. But what I want to do is slow the market down for you, okay? I want you to slow the market down, and this will allow you to do proper analysis and to be confident about the trades that you take. Now, another thing I want to let you know is that this method, it takes patience, okay? It takes patience. So if you are of a gamble mentality, this trading strategy, it may not be for you, okay? It may not be for you. My recommendations may not be for you, what I should say. But this works for everybody. But this does require patience, the way that I teach it, the way that I recommend taking it. It does require patience, so you must develop patience. So let's get in and let's jump into this. All right, so this is, again, down to the bare basics of trading, again, which is support and resistance. Support and resistance. Let me just type this out. Support and resistance. All right. And just in case if you don't know what support and resistance is, all right. So support is basically what would be considered a floor. All right. You think about a floor. You're walking on a floor. That's your support. Excuse me. I am just going to, I'll leave it red, but I'll just change this. All right. So this is a support. All right. This is where the market, it came down and found support, and like a basketball, it jumped up or it bounced up. All right. So that would be support. And then our next thing is resistance. All right. Our highest resistance on this particular chart is over here. All right. So the market, it came up here and it found resistance. It found a ceiling, if you will, and it bounced down from the ceiling. So that's resistance. So this is based off of support and resistance. Now, one thing that I love about this is it takes the guesswork out. Excuse me, it takes the guesswork out. It takes the guesswork out. So typically what you want to do, our very first thing we're going to do, let me just adjust this. The very first thing that we're going to do is we're going to mark our chart for support and resistance. All right, very first thing. All right, it is to mark the chart for support and resistance. All right, so you're going to load your chart. All right, and then what you're going to do is you're going to come into your chart, and then you're going to start marking your support and resistance levels. Okay. And if you don't know how to identify support and resistance levels, then you're just going to have to take a look at the support and resistance module. So here I am. I'm in here marking the different levels of support and resistance. Yeah. Okay. All right, and I'm just doing it for the immediate chart. Okay, that's a level there. Or when I say chart, what I should say is the immediate price frame. So basically, when you open your chart without having to scroll to any type of back history or anything like that, we're really only concerned with the immediate chart here. So let's see here. This portion it did act as. This portion did as well. And just the major areas is really what we're concerned about right now. I'll go ahead and grab this as it is on the chart. All right. So now we have our chart mapped out for our different support and resistance levels. Okay. And so what are we going to do? What we are going to do? Can't talk. What we're going to do now is we're going to look for price to get to the area, to the support and resistance areas. Okay, and once price is at the support and resistance areas, we are going to pay attention. All right, we're going to pay attention to price and see what it does. All right, so our next thing, for number 2, is we pay attention to price to see what it does. We call that price action. All right, this is called price action confirmation. All right, let me make sure I spell here. Price action confirmation. That is the number 2 thing. Let's see, which I don't have key in exactly, but number 2 is this, and what I'm going to do is I'm going to make these all right. So these are the 2 main things. Okay, we're going to mark our chart for support and resistance, which we've done, and we're going to wait for a price action. All right, so now let's backtest this. All right, so let's backtest this right here in this area. So what we have here is price has come up, all right, to this resistant level. Okay, and now we're waiting to see how price is going to react. So we see here with this gold candle, which is my bull candle, which is the candle that indicates the market going up. All right, it comes up to this area of resistance. All right, and we see that the buyers are taking resistance from the sellers, and it backs down. It does not break this point. Okay, and now we see here again the buyers try to take it up past this point, but the sellers are fighting them back. All right, so now this candle right here, this is our signal candle. Okay, so let's just say for, let's just call this step 2A, okay? 2A, we're going to look for our signal candle, all right? And so, all right, 2A, we're looking at our signal candle, okay? And which would be this one. So now, for me, my signal candle, it would have been this one here, this bullish candle, which is what we call the doji candle. All right, this formed a doji candle. It kind of looks like a cross, okay? And for me, that is a signal that, okay, the market is coming to an exhaustion, okay? It hasn't made it has not determined which way it wants to go, but at this point, it is now at a level of exhaustion, okay? They fought, and no one was really the winner, all right? The Bulls won just a little bit. They won by a hair, so that's why this candle is the my bullish candle color that I've selected, which is gold, all right, or orange, however you may see it. All right, so that's my signal candle, and now I'm waiting on 2B, which would be my confirmation candle. Okay, 2B is a confirmation candle. All right, it's my confirmation candle is what I'm waiting on. Okay, now the first gold doji candle, that's my signal candle, and then now I'm waiting for my confirmation candle, which the next candle that formed is another doji. Now, some traders, they would have went in on this very first doji candle, okay? They automatically see doji candles as a reversal signal, and that's not the case all of the time, okay? That's not always the case, because this next candle could have very well went up. So for us, this is just a signal candle, so we're waiting on the next candle right here. And what I'm going to do is we're going to zoom in a little bit. All right, so now let me get this so you guys can see. All right, so here's the doji candle, all right, signal candle, and then I'm waiting for the next candle to form, which is going to give me my confirmation, okay? And so it does not give me my confirmation. It just lets me know that, okay, the market is still at a point of indecision. All right, it's at a point of indecision. It doesn't know if it wants to go up or if it doesn't want to go down. And by this time, I trust that you guys know your different reverse candle patterns. If you don't, check out the reverse candle pattern or the candle pattern module in the community, and that'll teach you. But our second candle gives us another doji, all right? So the market is in indecision, all right? It's indecisive on which way it wants to go. So now there's another signal candle for me, all right? And so now my next candle that I'm going to wait on, that's going to be my confirmation candle. Okay, that's going to be my confirmation candle, all right? And so after I get this confirmation candle, which it lets me know that the market, it does want to go down. Okay, it does want to go down. All right. And so the next day, what I would have done was come in and put in my sell order. All right. Now, the thing about this strategy, along with every other strategy, and this is the reason why I chose to do this first, is that this is not a 100% strategy. All right. This is about an 80 to 90% strategy. But because we're not taking a lot of trades, because this strategy will not allow us to take a lot of trades, we're going to be patient. We're going to wait for the market to form the perfect situation or environment for us. Okay, but it's not 100%. It's about 80 to 90%. Excuse me. So I would have gotten in, right? And so when I would have gotten in at this point, okay, we see that the market actually it went against us. Okay, it did go against us, and let's say we would have gotten in at the end of this candle, at the end of this day, this candle right here. All right, we would have gotten in, and the market would have went against us for 111 pips. Now, if you have a strong account and you follow the risk management strategies that I teach you, you could have held out. All right, you could have held out, okay, and waited for the market to start going in your favor. All right, and let's say down to this point, you're looking at a total. Let's take a look at the entire move. You're looking at when the market were to start going in your favor. You're looking at a total of, let's say, this may have stuff out here, 822 pips. So let's say you're trading at $1. That's $822 that you would have made over 62 days. So over 2 months. That's just at $1. So if you're trading a standard, it's $10. You would have made $8,000. Let's say that you were trading at $100. You would have made, yes, that's right, $80,000 over 62 days or 2 months. All right. So that's what I love about this strategy. All right. Even though it is 80 to 90%, maybe even more, but we'll just stick with 80 to 90% win rate. That's because that's the numbers that I've had. That's my win rate. You're gonna have some setups that don't totally work for you. Okay, they don't totally work for you, and I want to show you that because this is not a 100% strategy. No strategy is. No strategy is 100%, but this is going to help you to trade the market easily. All right, it's going to help you to not be frustrated. It's going to help you not to be aggravated. All right, it's going to help you. It's going to free your time up. Okay, so you're not having to sit at your chart all day long. All right, but it's going to allow you to get in the market. All right, at any time that you want to get in, you can trade when you want to trade. You only trade when the setup happens. So now let me give you a perfect scenario. All right, let's take a look at the perfect scenario. All right, so the perfect scenario is this: when the market came down here and it came up. All right, here is our signal candle. All right, this is our signal candle. It's a doji candle. It is a doji candle, and our confirmation candle is this. It is this candle forming as a bearish candle. All right, so again, a doji candle is just a letting us know that the market is in indecision. It doesn't know which way it wants to go. And then here, it actually shows us which way it wants to go. So we would have came and got in at the end of this candle. This is the close of the bearish candle. All right. And you could have rolled this market down. Let's just say, let's go right here. All right. You could have rolled this market down for 797 pips, almost 800 pips. All right, almost 800 pips. All right, and from that point to this point, it's 54 days. So you could have made, if you're trading at $1, all right, perfect scenario, okay, I know people they get excited about perfect scenarios, so that's why I wanted to start with a scenario that's not a perfect scenario, but now we have a perfect scenario, so get excited. Almost 800 pip move. So if you're trading at $1, all right, you're patient. You could have made $800 in a little less than 2 months. If you're trading at $10, you could have made $8,000 in a little less than 2 months. All right. If they're strengthening your account, if you're trading at $100, you could have made $80,000, right, in a little less than 2 months. This is a win strategy. This is a win strategy. You're being patient and you're waiting for the market to come to you. We're waiting for the market to come to us. All right. We're gonna mark our chart. All right. Mark your chart for support and resistance. Second thing you're going to do is your price action confirmation. All right. Letting us know when we are to get into the market. All right. And we break that step down. We look for the signal candle. Here's another signal candle right here. All right. The market, it comes to an area of resistance. Okay. And that candle closes, and we see here that the bulls or the buyers, they were not able to surpass this level. All right, they were not able to surpass this level. And here's our confirmation candle. This candle right here. This candle right here is our confirmation. Okay, the market wants to go down. So after this candle, I am going to put in a sell order. And let's just take a look at the entire move. 214 pips. All right, you could have realized 214 pips in 3 days. Okay, and excuse me. Like I said, if you're trading at $1, that's $214. $10, that's $2,014. $100, that's $20,000. So yeah, very first sign of the market turning around on this is 214 pips. So you could have realized 214 pips in 3 days. And again, you have slowed the market down. All right, so you're only getting into this at, well, I get in during the London or New York session. All right. I don't get in during the Asian session because there is a lot of consolidation that goes on in the Asian session. All right. And I typically wait for the London and or New York session around the middle part just to see what the day is going to what price is going to do for that day. All right. And then also this kind of goes to our beat the market trading strategy module. You have to check that out because we have some more information about what goes on during the Asian session, the London session, and also the New York session. And you guys who know that, then you already know the secret to when you want to get in and what you're looking for to get in. So here's my signal candle. All right. And then even if you were a little patient, you could have came in and said, you know what? No, this is my signal candle, and I'm going to wait for an indefinite bearish move down. So I'm going to wait on this candle to form, and then I'm going to get in after that. And then here we're looking at I'll stop here. We're looking at 133 pips, and here 197 pips. All right, before the market decides to bounce off of this area of support and head back up. All right, and then even then you could have you could have gotten in. I probably would have taken this trade about when this candle here, this bullish candle here had closed. I would have gotten in. and we got in here. And if we take this move all the way up before the major turnaround, you're looking at 360 pips in 32 days. So yeah, so we're waiting for, we're going to mark our chart for support and resistance. We're waiting for price action to get to the area of support, and we're looking for our signal candle and then our confirmation candle, right? And then our third, let's try, I'm going to put these up here. It's trying to be a little neat here, but I'm just going to put those right here. Okay, our third thing that we're going to do is place order during London or New York session. Now here's the condition. If candle is still going in the direction of the confirmation candle. All right. Let me see if I can. I might have to use the other thing here. Let me see. Oh, yeah, I'm gonna have to. Sorry, guys. Just, it's not really to cooperate with me right away. Place order during London or New York session if candle is still going in direction of signal candle. All right. All right. So for instance, this here, let's go here. Maybe you guys can see this better. All right. So here's my signal candle right here. All right. Here's my confirmation candle. All right. And now I'm going to get in during the London or New York session only if this candle, right, after my confirmation candle, only if this candle is still going in the direction of my confirmation candle. Yeah, I'm sorry. That should have been a confirmation candle, not a signal candle. So here is our signal candle. All right. And again, I'm not necessarily looking at a perfect situation, all right, because I don't want to sell you pixie dust, all right? I don't want to sell you unicorns, okay? This is real market, this is real life, and that's what you need, all right? You need real life, and this is what happens. Sometimes we're going to catch these long runs like this from down here all the way up to here for 848 pips. And then other times we'll be able to catch short runs, okay? Like from here down to this portion here for 192 pips, okay? But either way, all right? Either way, you're making money, okay? Either way, you're making money. You're taking care of yourself. You're taking care of your family. You're funding your dreams, all right? You're taking back the power. You're taking back the power that God has given us to gain wealth. All right, and so you guys know who I am. All right, I'm a pastor. I'm a Christian, and so I believe in God. I believe in the blessings of God. I believe in the anointing of God, which is the spiritual enablement of God, of the Holy Spirit. All right, and so the Bible teaches us that God has given us the power to gain wealth. And the sad part about it is this: is that many of us are forfeiting that power, and we're making money, we're gaining wealth for someone else. You right now, you have a 9 to 5, you have an 8 to 5, and that power, that anointing that you have to gain wealth, you are now forfeiting it for the company that you're working for. You know how well you shine. You know how hard you work. And because of that hard work that you're putting in, you're making a lot more money for that company than you are for yourself. All right. So I look at this as you taking that power back. All right. You're taking that power back. So this is real world. All right. I know everyone has not been born with a silver spoon in their mouth. But this is a way that if you have not been born with a silver spoon in your mouth, you can still go and get the gold. You can still go and get the silver. All right. And so you're gonna catch some short ones, okay? But you're getting that power back. All right. And I'm saying $1. Once you get your account up, all right, some of you may not be trading at $1 right now. You only may be trading at a micro lot of 10 cents. Okay. Let's say you're trading at a micro lot of 10 cents, you would have got in. All right, here you're looking at 192 pips, so you're looking at $19.21. All right, that's okay. You're growing your account. Okay, you're getting your account to the point that you can start making the standard lot of $10 trade. All right, and so again, if you're interested in the risk management, excuse me, I can't get it out. If you're interested in the risk management strategy that I provide the community members, sign up for the coaching package. Okay, sign up for the coaching subscription, and you'll learn that. You'll learn how to not blow your account and over leverage your account. Okay, all right. So yeah, so you may be trading at a 10-cent micro lot. All right, and that may be just a $19 move in a few days, but that's okay. That's 19. That's 19 more dollars that you're putting in your account, and you're growing your account. Okay, all right. Let's take a look at some more examples here. Um, so this area right here, all right, to the far right, this area right here, up at the top. All right. So for me, this would have been a little aggressive, but I would have taken this as a signal candle because it's reached a point of resistance. All right, it reached a point of resistance, and now we have a rejection. All right, it was going up. We have this long move going up, and now um, this movement to go past this price point has now been rejected. All right, so that would have been my signal candle. This would have been my confirmation candle. All right, and after the close of that confirmation candle, I would have gotten in during London, all right, or New York, and I would have rolled that one all the way down. And this is current date. All right, today is October 14th at 4:54. The market is about to open here in my area on the east coast of the U.S. at 5:30. So 5:30 on the Sunday. But anyway, we took it here and rolled down for 188 pips, and I would have made about $1,000 in 2 days. All right, $1,000 in 2 days, trading at a standard lot. All right, trading at a standard lot, $1,000 in 2 days. Unheard of, right? All right, so now let's go and let's back test this a little bit, okay? Let's back test it. So we didn't do this one. All right. So now here's my signal candle. All right. Here's my signal candle. It reached this point of resistance and it was rejected. Now here's my confirmation candle. I would have got in during London or New York. All right, and let's see, it would have went against us a little bit here for that one day. All right, but that's still not enough for me to get out. It went against me 36 pips. All right, so $360 is what I would have been out of for during that day, but this is not enough for me to get out. All right, the next day it goes in my favor. All right, and again, if you want to learn how to stay in your trade, and get the confidence to not freak out. You know, if you're trading at standard lot, not freak out of being out of $340, then sign up for it. But right now, this is our strategy. All right, this is our strategy. All right, and so we could have rolled that down. Let's see, I would have came down here. All right. Actually, I would have got out here because, and why do you say that? Because here I have a doji, which is my signal candle, all right, and then my confirmation candle that the market was no longer going to go in my favor would have been here, all right. So that would put us at 352 pips. So I'm looking at a profit of a little over $3,500. You're looking at a profit at $352 if you're trading at $1, or $35 if you're trading at 10 cents. All right. So there we go on that one. All right. And so by now you should understand the basics of support and resistance. All right. Now let's get into the psychology of this thing. Okay. All right. Just ran over. So, now, check this out. Now, we've talked about support and resistance being the very base at trading. Okay. Now, here's the key thing. What if I told you that instead of marking up your chart the way that we've done, what if I told you that there's a way for you to know where there's going to be a possible reversal at without you even having to mark up your chart? Would you believe me? I hope that you would. All right, so I want to talk about the psychology of this thing. So there are points in the market that are psychological, that there are usually there's always a reversal at these points of the market. There's always something happening. All right, there's always something happening. Now, these points, there's a theory out there called, and some of you may have heard this, but there's a theory called the quarter point theory. The quarter point theory. And so what it does is it breaks the chart up into quarter points. So let's say you're starting at 0. You got 25, 50, 75, and then the dollar. And then it repeats over and over and over and over. These are psychological numbers that we all think of. Oh, 5 o'clock and the market has started. These are all psychological points that we all think about. Right? So what if I tell you that, hey, can I borrow $1.99? What are you going to do? You're going to say, oh, here, take $2. All right. Or if I say, hey, can I borrow $2.49? You're going to say, here's $2.50. All right. So these are all psychological, and this is the way that the banks trade. All right. These are called quarter points. They're called round numbers, half numbers. Okay. Now there's a tool in the market called Walt Soft R&B, Walt Soft round numbers. All right, you're gonna come to the market and you're gonna type in round numbers. You're gonna find this, and over here there's gonna be a download button. All right, there's a download button. All right, and once you have it downloaded, you're gonna load that indicator. All right, I'm gonna change this because we're gonna keep this in keeping with Teach Me the Fish color. So I usually go with orange and gold and white. All right, and now, so with this, we're only going to be looking at whole numbers and half numbers. Whole numbers and half numbers. Whole numbers and half numbers. That's all you need. Whole numbers and half numbers. All right. Now, if you are a part of the Teach Me the Fish community, there is another indicator called the quarters theory indicator, and that is made available to you in the community, and I teach you how to use that. But for right now, this free tool in the Forex market is going to help you. Now, do you see what I see? I see support and resistance all over this chart. All over this chart. Let's take a look at this right here. This last swing in the market. What do you know? It swung at, or for the USD JPY, it swung at $114.50 or spot 114.5. All right, 114.5. Wow, it made the turn at the psychological number. Now, let's take a look at another point. Wow, look at this point right here. It made the turn at it made the turn at 110 spot 0. It made the 10 at 110. It made the turn at 110. I apologize, excuse me. It made the turn at 110. Psychological number for the market. This is how the big banks are trading. They're waiting for a market to come down to this point before they want to buy. All right, it's a psychological number. Here's a point here where the market turned at 110 spot 5. 110 spot 5. Here's another one. It made the turn at 109 spot 5. 109 spot 5. Here's another turn at 108 spot 5. Here's another turn in the area of 104 spot 5 and 105. Come on, do you see this? Do you see this? All right, guys, sorry about that, but I am back. So these are all psychological numbers. These are all psychological places. All right. And you saw me. The only thing that I did was I just pulled the indicator onto my chart. Okay. I pulled the indicator onto my chart. All right. I didn't do anything but pull the indicator onto my chart. And all the indicator does is it points out the whole numbers and the half numbers. The whole numbers and the half numbers. All right. So we can go through this chart, all right? And this works on any chart. But here we have a turnaround at 114 spot 5. At 114 right here, all right? So the complete turn, the actual ceiling was here at 114 spot 5. But we see here that the market turned around at 114. And so how do we work this? How do we use this in our favor? All right? So the way we use this in our favor is that as the market is approaching these whole and half numbers, now we are we're especially taking notice of this. And now we want to see how the market is going to react around these psychological points. Come on, I know somebody's out there is feeling good right about now. The light bulb just went off. All right. The light bulb just went off. All right. Now watch this. This works on any time frame. Let's jump down to the 4-hour time frame. All right. If you're here in the U.S. on the East Coast, every 4 hours you're going to check it. Starting at 5 p.m. you can check it. 9 p.m., 1 a.m., 5 a.m., 9 a.m., 1 p.m., and then again it starts over at 5 p.m. All right. So, and I'm just talking about for the 4-hour chart. Okay. Excuse me. You're still slowing the market down, but now you're checking your chart even less throughout the day. All right. So again, we see here that this 4-hour candle would have passed, right? And now I'm waiting to see what price is doing around 114.5. And what is it? What happens on the next 4-hour candle? All right, it gives me a bearish candle. So now for me, that's my signal. Okay, that's my signal candle. This is a signal candle. All right, price is going to a place of resistance, or for us, it's now reaching a psychological number, and so now I want to see what it does. And here's my signal. It's telling me that the market wants to go down. Now I'm waiting on my confirmation candle. All right, and so I'm going to wait 4 hours, and if this confirmation candle finishes bearish, all right, like this one did, now I'm going to get in. And look at this ride down. 248 pips. And 39 4-hour candles, which is 39 times 4. 156 hours. Let's divide that by 24. That's 6.5 days. Banking. 6.5 days. I'm just riding it. I'm just riding it down. All right. These psychological points. Okay. If you would have never saw it, I know you would not have believed me, but now you see it. All right. Now you see it. In the natural world, seeing is believing. All right. Seeing is believing. And you can just scroll through this. All right. Let's take it down to the hourly chart. Same thing. Same thing. I'm not making, you see that I'm not making this up. I just pulled, an indicator from out of the market that lists the psychological points, which are your whole numbers and your half numbers. And you can even break that down into quarters. You can add in your 25. You can add in your 75 quarters. All right. Now watch this. If you still don't believe me, you can do this yourself. All right. So now let's look down here. I'm back on the daily chart. All right. Let's come up here. All right. Even if you don't have an indicator. All right. This is close to 114.5. All right. So we'll take a horizontal line. We'll adjust it. We'll come over here to the parameters, and we'll put it at 114.5. And it still shows us, wow, support. We still see resistance right here. All right, let's grab our horizontal tool and come back down to this swing low. All right, let's see which quarter this is at. This is close to 104.5. So we change that to 104.5. All right, and we see that it's still down here in the area of support. All right. Again, you can't make this up. All right. So even here, you're at let's just say 113. Wow, what do you know? We have a turnaround at 113. Let's see. Let's take a look at another turnaround. All right, this is 108.749. So if you even just come in and add the quarter points of 75, so 108.75. Wow, look at that. 108.75. You got to turn around there. This is probably going to be close to 108. This one is close to 108. This psychological levels or price points in the market. We have that area. It turned around. So I've showed you how to set support and resistance, and now how to add in the psychological numbers of the whole numbers and the round numbers. So even if you don't have the indicator, okay, even if you don't have the indicator, again, you're just going to grab your horizontal tool. All right. Make a mark at support and resistance. You can right click it, select horizontal line properties, come to parameters, change the value to the nearest whole or half number or quarter number, adding in 20, 25, 50, 75, or the whole number. All right. You hit OK, and it shows you. It's right there. It's right there. It's all psychological. All right. There's always people in control of this thing. All right. And so you have to know how to trade with them or you're going to lose money. All right. So you have to be patient and you have to trade with them. Let me show you this. No, we're not going to go there. We don't need to go there. This is all you need. This is all you need right here. This is it. So the first thing we're going to do, let's grab this. The first thing we're going to do is what? Support and resistance. And because we know our greatest support and resistance tool that we have is price point. It's the psychological numbers that the banks are using to trade, that the banks are pushing the markets to. Okay, it's these psychological numbers. So support and resistance. Here, let's call this. Let's call it psychological support and resistance. All right, psychological support and resistance is the first thing. All right. All right, so we're pulling in our whole numbers, our half numbers, and our quarter numbers. All right, and the second thing we're going to do is price action. All right, and we break. How do we break price action down? By looking for the signal candle. And after we have our signal candle, then our confirmation candle. All right, so our signal candle lets us know that, hey, the market is going in a different direction. And our confirmation candle, it gives us the confirmation. All right, and then the third thing we want to do is place order during, here, let me make this capital so you can see it, place order during London or New York sessions. Easy 3 steps. Oh my goodness. I wish this thing had an undo. I'm so sorry. Let's do this again. All right, so this is all live, guys. Maybe I may edit that part out. So first thing is the psychological, and I'm spelling psycho wrong, but anyway, psychological support and resistance. Here, the second thing, price action. All right, I'm gonna break that down into 2 parts. 2A, signal candle, and 2B, or not 2B, but 2B is our confirmation candle. Okay, simple, right? These are simple steps. You guys are getting ready to kill the market. You get ready to kill the market. I can't wait to hear the testimonials. And then the third thing, place order during London for New York sessions. You guys are getting ready to kill this thing. And so Just say this template, say template. Cycle steps. All right. So now we're gonna get our psychological support resistance, which is based on our round half numbers and quarter numbers. Okay. We're going to take a look at price action, and what do we mean by that? We're looking for a signal candle once it comes up around support and resistance, and then we're waiting on our confirmation candle, and then we are going to place our order during the London or New York session. We're going to be patient, all right? So when we're on the daily chart, these candles, they close at 5 p.m. They close at 5 p.m. and open at 5 p.m. All right. So this candle will close at 5 p.m. and then we will wait for the London or New York session. And if you're here on the East Coast of the U.S., London session starts at 3 a.m. and New York session starts at 8 a.m. So you pick and choose. And when you wake up during the London session, if your confirmation candle is or if the candle after your confirmation candle is going in the direction of what your confirmation candle is, which I mean by whether it's bearish or bullish, if it's going in that same direction, then you're going to put in your order. All right. And so there you have it. All right. And now this is the Teach Me to Fish Effects quarter swing strategy. All right. Quarter swing strategy is what we call it. And this is literally all you need. You don't need any moving averages or anything like that. Now watch this. To give you more confluence, or to give you more confidence, to give you more signals that agree with your analysis, you can throw on some moving averages. All right, you can throw on moving averages, and there are some other things that you can throw on as well. But what I'm going to do, and if you're a part of the community, you guys have access to this template that I've done. All right, no, I don't want to show you guys this. Let me just go back to the cycle steps. All right. Let me just plot these on here. All right. So we have our 400 exponential moving average, and then we have our 200 exponential moving average. All right. And so now how does this work? Okay. Let's get rid of these. How does this work? How does this help us? Okay. So when your candles, all right, when your candles are above the 200 and the 400, okay, you're looking for signals, all right, that are going to allow you to take buy orders, okay? All right. So here, all right, we had a downward movement. Here's our signal candle letting us know that the market is changing. It turned around. Here's our confirmation candle, and then during London or New York, we got in on this candle and we rolled it up. Okay. Now watch this. Let's throw on. Let's throw on the round numbers. So now, look, price is above here. All right, it's price is above the 400 and 200. Okay, and it's also at a round number, 110.5. All right, and it's telling me to go up. Confluence, it's above my 2 and 400 moving average. All right, and it's at a round number. It's giving me a signal that it wants to go up, and it's giving me a confirmation. This would have been my confirmation candle, not necessarily this one, but you could have went with this one, but it's giving me a confirmation that the market wants to go up. So now I'm riding it up. Now, one thing you're going to notice is this. Whenever the white 200 moving average is below the gold 400 moving average, the market is going down. Now you can wait for the crossing of these moving averages, but you're going to be in the game way too late. So let's say it crossed here. It crossed on this candle right here. This is where we see the crossing here. All right. But price, it came below the 2 and 400 way back here. So you're missing out on a total, I mean, my goodness. Let's see. To get here, you're missing out. Which candle was it? It was this one. You're missing out on 344 pips. Who wants to do that? All right. So you can use these as Confluence. You can even use them to trade. But just know that if you're waiting on the crossing of these moving averages, you're going to be missing out on some pips. And if you're fine with that, then you're fine with that. But we can back test this. Whenever you see here, whenever the 200 crossed the 400, price was above it. It was an uptrend, right? And whenever it crossed downward, price was below it. All right. And whenever they go sideways, usually price is in between. Okay. All right. We can back test this even further. You see here that it crossed, price is below it. All right. And it crossed. Got a good cross up here. All right. But the main thing from this is when price itself is below or above and below the 2 and 400. All right. So if I was using this, okay, then this is really just to give you better confidence. Or if you're a new trader, this is kind of, this is the training wheels for you. Okay. You can wait for price to cross the 200 and the 400. Once it crosses the 400, you can go ahead and put in this instance, you will put in your sell order. And we could have rolled this thing down for, let's see, with a cross here. You'll wait for that candle to close. Let's say even if you waited for it to cross back up over the 200, you're looking at anywhere from 900. You're looking anywhere from 730 pips to 900 pips. All right, even if you would have waited for it to cross back over before you got out. Okay. So these moving averages, they're not the end all be all, but they do help. And again, this works for any time frame. Again, I recommend not going below the 1 hour. This works especially for the 1 hour, but don't go below the 1 hour. You can try it, but it does still work. But through my back testing, the 1 hour, it's the best for this strategy. The 1 hour, 4 hour, daily, things of that nature. So that's it. That is the Teach Me to Fish Effects quarter swing. This is how I am easily trading the market. I'm able to stay in for long periods of time, days or even weeks, even during the I'm just gonna save this real quick. Cycle steps. I hate that I'm calling it cycle steps, but this is for psychological. But let's just go blank. Even in the recording of this, taking a look at the weekly chart for the UJ. All right. Um, Here I have a signal candle, and last week was my confirmation candle. And at the start of this week, I'm waiting um, for London and New York. All right, and if this candle here is a bearish candle during London and or New York, I'm going to jump in it, and I'm going to ride it out for however long I'm able to. I'm looking at this area right here. So I'm looking for around 755 pips. So I'm looking to get about $7,500 off of this trade. I'm hoping that it rides down to this point. But if not, then we'll get in, and it might run down to this little area right here and give me 240 pips and about $2,000. So, but we'll see. But that is it. That is our quarter swing method. All right. You're gonna look for psychological support and resistance, and that's either you're gonna chart them on yourself. You're looking for the whole numbers, half numbers, and quarter numbers. All right, or you can use the round numbers indicator, right, found in the market. All right. After that, you're gonna wait for your signal candle. Okay, you're waiting on your signal candle. Once you get the signal, you're waiting on your confirmation candle, and then during the next London or New York session, you are looking to get in if that current candle is going in the same direction as your signal candle. So, guys, I am looking forward to the testimonials. Please hit me up on Facebook, Instagram, YouTube. Let me know how well you're doing. Let us know here in the Teach Me to Fish Effects community. And as always, I like to end these by saying happy fishing, and if you stay in God, you will stay in control. I do appreciate you. Have a great day. Bye.